and the capital requirement. We have Siddharth Purohit, Senior Equity Research Analyst Banking at Angel Broking, now joining us from Mumbai. Siddharth, thank you very much for being here today. Can you tell us how do you look at the capital requirement situation as far as the public sector banks today are concerned?
In fact, what we saw in Q4 is that, whatever estimate we had done, the losses put by all the PSU banks were on a much higher side. I mean, on a combined, it was close to 24,000 crore. So based on that, I think the entire presumption of whatever capital requirement was required for FY17, it certainly needs to be increased. And as you know that, government in the Indra had announced that, on a total, they are going to support 70,000 crores, out of which 25,000 crore has already been given in FY16, and another 25,000 crore will be provided in FY17. So the balance amount remains is only 10,000 crore each in FY18 and 19 itself. So, but looking at the current asset quality and the provisions that we are seeing, and possibly with more stress remaining in the system, we believe that this amount is going to fall way short of what is required, and government will have to come out with new plans and come up with a new amount, and substantially higher than the 25,000 crore that they are planning. And I believe that is going to impact the overall kind of profitability, because that might result in higher dilution for peers.
Right. Talking about FY17 first, Siddharth, what is your estimate in terms of what could be the capital requirement? I think we've lost the line. We'll try and get him back. But of course, as he was mentioning that, government has committed to give these public sector banks around 70,000 crore rupees, out of which 25,000 crore rupees has already gone. 25,000 will be coming in this particular financial year. Our sources have indicated that now, the earning season for the fourth quarter is over. So now government will start considering. Siddharth is back with us. Siddharth, talking about FY17, 25,000 will be coming in from the government side. What's your estimate? How much more would these banks require in the current financial year itself?
As I was telling you that, the asset quality doesn't seem to be improving. So if more pain, what we believe is that more pain is left for PSU banks, and there could be subsequent losses for some of the mid-size and small-sized PSU banks. So the amount can vary depending on that. But to my assessment, somewhere close to 35 to 40,000 crore would be a fair assessment for the timing. So, and that again doesn't really solve the entire problem, but that is what I believe is the minimum amount that the government should be providing for at least meeting your regulatory norms, also for future growth. And future requirement of capital will depend on how FY18 numbers comes out, and how far the banks, PSU banks particularly, are able to upgrade and recover their NPS. If the recovery and upgrade happens on a higher side, then possibly the provisioning requirement will not be that high, what we saw in FY17, and capital requirement could be on a lower side. But we don't see that happening in a hurry. So possibly capital requirement will go up in FY17. As I told you that, on a minimum side, 35,000 crore should be the requirement, and even on a higher side, it can cross 40,000 crore. I mean, that's what we believe.
So your view is that 40,000 crore is something that is expected, is going to be the need in FY17. As far as the asset quality is concerned, for how many quarters now going forward are you likely to see some pain continuing? What's your assessment there?
See, the first 2 quarters of FY17 will certainly be under pressure, because so far we have seen PSU banks filling up their balance sheet in terms of only the larger accounts are concerned, particularly the AQR related accounts, which were identified by RBI. But there are many more accounts beyond AQR which needs to be recognized and adequately provided for. And there could be also some, slippages. What we have seen in that, particularly banks which have higher overseas operations have seen some amount of slippages from that side also. So possibly another 4 quarters is something, what we believe that is not going to see any kind of, improvement in asset quality. But beyond that, we don't see that, that asset quality will deteriorate. Possibly it will start stabilizing thereon, and then we can see improvement from FY18 onwards. So in the near term, at least for 1 year, we don't see asset quality really improving. But the only good part is that now banks have taken a very aggressive call on the recovery process. If you see the Q4 numbers, recovery has been quite impressive for a couple of banks like Bank of Baroda and all.
Right.
So if recovery numbers happens to be good, then possibly overall on asset quality front, you might see some improvement.
Right.
So, but that's a difficult target given the current macro scenario.
Last question, at the current valuations in the PSB space, what is it that you like?
See, PSU pack entirely, if you see, almost all the PSU banks have very low return ratios, bearing very few. I mean, almost the small size banks, most of them have reported losses. A couple of banks which has not reported losses, like State Bank, also have very low single-digit return on equity. And with more capital infusion and dilution in in the recent time, we see that the ROE is not going to improve to double digit anytime soon. So we believe that there could be a trading interest from from the market, but we don't see really long investors coming in at this moment for the timing. So we are still staying away from PSU banks for the timing. Though there has been some rally in the PSU banks in the last 1 week or 2 weeks time and post result of SBI. But the long-term trend doesn't really justify that one should go and buy right now, because they are continuously losing market share and their capital adequacy is barely meeting the regulatory norms. So I mean, return ratios will be under pressure, and that's why we believe that the valuation will be under check. So we see very limited upside for the timing. We can change our view, but if government comes out with a very strong a plan for recapitalization and addressing the NPA issue. So only in that case we can revise the rating for PSU banks, but we remain neutral and we have a little negative bias for the timing. We are not buyer in PSU bank right now.
All right, Siddharth. Thank you very much for joining us here on NDTV Profit and sharing with us your thoughts as far as the PSB space is concerned. All eyes on the government and its recap plan if that gets a little better from here. We'll slip into a quick break.